There's a saying that goes, if it's too good to be true, it probably is. Traders continue to reach up higher in the stock market as we're heading into this non-farm payroll report and Michigan consumer sentiment preliminary numbers. On today's stock market brief show, we're going to be diving into some of these various charts. Specifically, I want to talk about the dollar seasonality and what do I see as far as market conditions go. We're going to dive into some of the larger market cap names as well, given where they stand within those expected moves, or I should say, outside of. All that and more. Let's get into it. All right, everybody, welcome back to the show. So as I've stated, we do got some big data coming out tomorrow, and with big data comes bigger implied moves. So we're going to talk about what to watch out for as far as specific levels go in the SPY and the Qs. Got to give you a little bit of tidbit there in just a moment. I gotta call out Bitcoin. Bitcoin reached into 100K. Woohoo! Party on. That was a large move. We're seeing some big volatility here as try to consolidate around those levels. I found this tweet online floating around. John McAfee, 6/19/2019 said, if Bitcoin breaks 100K, you can bet that it'll break 1 million. Wouldn't that be crazy? Well, it was crazy to even think that it would hit 100K, and we are there. The sailor to shift tool did catch the signal and the trigger before making its way up into that 100K level. And you can see the rate of change is coming off ever so slightly, but it still remains on the buy signal and buy trigger. S&P 500 would be closing at a new weekly high if we close up into this range. We still have one trading day left. We're getting a little extended from that weekly 5 EMA, and it's one that connects very frequently. So when we get extended, it's likely to tag it at some point as this continues to creep up. It's when we start turning around, it could get a little bit more bearish there. And as the S&P 500 is really just wedging and going tighter and tighter, there is various data prints stating that the weight of the largest top 10 stocks is getting quite extended. You can see that gray line over here where we currently stand. This was during the pandemic, the great financial crisis, the dot-com bubble, and obviously dating way back. We're now towards where those levels were during the Great Depression. As this is taking place, obviously volatility is coming in quite a bit. And you can see its historical average on the VIX is about 19.5. So volatility has been coming off. Puts have been getting relatively cheap as the market continues to press higher and higher. So, hey, nothing's wrong. There's nothing to worry about over here, right? Well, we could also look at back month to front month volatility, and this is also now around 22% higher than front month, back month that is. And these are the areas where price can begin to somewhat consolidate. And I want to call out back the dollar, right? The dollar on prior episode, we talked about, I think it was probably around this date or this day, I can't quite remember, but we said, hey, if you measure this little trend line down here, it tags to them perfectly, and you could see this area over here at 1045 has been acting as a prior area of resistance and support. So what happens if the dollar potentially comes into this area? Potentially it can use that level as support. Now, as the dollar's coming off, I did want to reiterate that Trump got elected in 2016. This year, he did the same. So it's important to look at election year seasonality. And I found this to be very interesting that from October to 2017, this is in 2016 over here, the dollar basically went vertical up until the end of the year. And typically, seasonality-wise for the dollar, the last 4 years, it's pretty much gone down after November. But when Trump was elected in 2016, there was a small little burst here of redness to the downside, and that happened to be November 23rd to December 5th. And I found it very interesting here as the dollar ripped up higher. Look at where we started to see weakness, November 22nd to December 5th. So if we're going to follow this same path and have a blowout move of the dollar into the year end, does that mean the dollar is going to continue to turn back around from its current point into the end of the year? And then when Trump's in office, is the dollar going to continue that seasonality downwards, which could very well be positive for various markets? Why do I say that? Well, look at China, right? China has been going up and now it's been coming off quite significantly. And while it was coming off after its significant move up, the dollar, it's been gaining a lot of momentum. So if the dollar were to happen to spike up into the year end, that could still put some pressure back into names like China. And then into the 2025 as we go, if the dollar comes off, perhaps that opens the door back into these names. Now, when I talked about this a few episodes ago, we were riding around this range as the dollar potentially looked like it could come off, and we were using this as the area where we can potentially see a bounce in China. So I did take that trade and I scaled some out. If you follow me on X, I posted about that just recently. Now, that's not the only thing that obviously benefits the dollar falling off, but obviously you can look at the S&P 500. When the dollar came off, yeah, the S&P 500 rallied. You can see the dollar came off recently along with the 10-year yield, and the S&P 500 came up. So if in the near term, if the dollar wants to take a turn here as the S&P 500 is getting rather frothy, will the S&P 500 come in, the dollar take a little bit of a bounce here in the near future? And I think that that's a possibility that we can at least be aware of, not a certainty, but a potential possibility in the near term. Now, as I usually talk about, I want to get into market conditions. Market conditions really let you what type of strategy would work best, right? So I'm primarily a swing trader, and I like to trade breakouts and speculations of breakouts. And when we're in negative gamma territory, that means below the gamma flip line, I get a lot more whipsaws, right? Because when we're in negative gamma territory or when we're in positive gamma territory, dealers act different. And if how the dealers act in those environments, you can adapt your strategy to that and the way that you size your positions. Now, as it stands now, you can see that traders are reaching up higher. They reached into 6,100. We dang near came into that very, very close when we started backing off. But that doesn't stop them from lifting up higher. They're reaching out to 6,200. So things are very, very bullish, and we're still above a gamma flip line. Does that mean we can't come off and then potentially back up? That's absolutely a possibility. But as it stands right now, we're in positive gamma territory, which means volatility typically comes in. It has been. And that's where dealers look to buy the dip, sell the rip. Okay. On the flip side to that, if we start getting underneath the 6,000, which is currently the gamma flip line, things could get hectic pretty quickly. This would be the time where I'd pay very close attention that as we've been in positive gamma territory, we're getting these small drift days to the upside. But if we've slipped into negative gamma territory in the near future, I feel like it's going to be one of those days where you get a strong down day, selling into selling, volatility ticks up, and it's going to wipe out 3, 4, 5, maybe even more days of price action that you've seen, kind of a slow grind, and kind of create a little bit of fear in the market. So I think we got to be aware of that as we've been just slowly drifting higher. Like I said, traders are reaching up higher, right? There's 6,100. Right there is at 6,200, and really nothing beneath us. So I'd just be paying close attention to this 6,000 level. Yeah, anything below that, it's an open field right there. So we have 60.50 would be the more local support, right? So if I show you on the chart, 60.50 is right here. And then underneath that 6,000 would I would just say be very cautious there, because if we do get into those levels, we would be below 5-day moving averages here as well. And as you can see, we're above a rising 5-day moving average, above a rising 5-day moving average in SPY Qs. IWM, it's starting to get underneath it and starting to go down. I will state that it is looking like it's just consolidating here. So I'd be looking for a trend breakout. I would want to see this to turn back up. If it doesn't, I'm not really that interested. But if it does, I would be interested at that time. DIA is starting to flatten out over here. That's the Dow Jones Industrial Average, the diamonds, and it's starting to flatten out, but it's turning yellow, so it's time to be a little bit cautious. Semiconductors are pulling into an inclining 5-day moving average. So if semiconductors can pick their head up off the ground, this could be a good opportunity here. But if it starts cracking down, obviously just be aware of that. And then XBI starting to flatten out here too as well, to slightly decline. So coming into tomorrow, like I said, we had the jobs report. What's the market pricing in as far as risk? Well, you can see here with our daily implied moves. So we have 603.26 to 601.50 to the downside. This would be the area potentially to watch if we were to come down in here for where the market could potentially find its bottom. It really depends on what the data says, because if the data comes in hotter than expected or cooler than expected, we can see the market as a price in expectations through the options market, forward-looking risk. If it's hotter or cooler than expectations, we can see multiple standard deviation moves. So this move, right, 68% of the time, it'll close within these ranges. We're not too far off the weekly implied move. We got pretty close to it today. So if the market likes what it sees, I'd say we go tag that weekly expected move. We are above the month-to-date anchored volume weighted average price, which also happens to be the week-to-date there too as well. So if the market really doesn't like what it sees, just be very cautious if we gap through any of these levels because they can sometimes turn into resistance and you never know. It opens the door for a wide move. If we look at the Qs, this is where things get a little interesting to me. Qs are well outside of the upper weekly expected move. They're pricing an implied move up north of about 527. I'm going to just round it. That's the higher end of it. And then lower down here at 516.65. If you want these levels and zones on your screen, just screenshot it and put them levels on your charts. But we are outside of the weekly implied move. And why is that? Well, it's driven by the larger market cap names, and that's what's really driving the S&P 500 this week. So take a look. NVIDIA, right? A few days ago when NVIDIA was right here, we made a video and we said the only way that the SPY is going to actually reach up into its upper weekly expected move is if NVIDIA starts to play ball. And NVIDIA, boom, started to play ball. But we also said Tesla right here said it has to pick up and start going there too to hit its weekly expected move. And boom, Tesla lifted its head off the ground there too. Take a look at Meta. Meta came in slightly today, but it's well outside of its weekly implied move. You can take a look at Amazon has been seeing some incredible strength here, and it did reach out to 2 standard deviations of its weekly implied move. Microsoft, same situation. Some very big strength in tech names. And Apple, right? Apple got extended from its expected move, came back into it a little bit today, but still remains outside of it. And then we have Google that came back into its weekly expected move on today's trading session. So when I look at this and I see some of these names already well outside the expected move, if the report comes out and the market's kind of like whatever to it, there's a high possibility, right? Based off of probabilities that we come back into these weekly expected moves. So if a lot of these bigger tech names come back in, I would imagine that we'd see Qs come back in down to this range too, which happens to be right around their lower daily implied move. And if that happened to SPY, well, SPY can have just a rather flat week, right? So as it stands right now, it's a very binary event. For me personally, as I'm trading and navigating this market, I'm relatively my foot's kind of like half off the gas right now as we've elevated into some pretty high territories. If you don't know, I'm currently in the United States Investing Championship right now. My portfolio just hit a new all-time high today. So we'll see here what that looks like towards the end of the year. And you can go to that website and you can view where I stand. I'm not using any leverage or margin in that specific count. And I'm up about around 50% from a year-to-date basis. So doing quite well there. That's all I got for you on today's episode, everybody. Hope it helps out, gives you some insight to what it is that I'm seeing in these markets. See you on the next show.